Hey guys, Boris from BK Forex. Welcome to our Forex Daily Technicals for a 9-4-13 with dollar yen take 100. As always, trading foreign exchange on margin carries a high level of risk and obviously for investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading on margin and seek advice from a financial advisor if you have any doubts. Well, dollar yen I think is going to be the central story because we've had this big breakout um, on Monday, ironically enough, when the U.S. was on holiday, and have kind of held above the 99 level for a significant part of today and yesterday. So 99.50 is sort of equilibrium level for now. 99.95 was the flame out a couple of weeks ago, or basically a month and a half ago, and then today we had a move that went to about 85, and then after that. We had a lot of U.S. Republican leaders basically signaled they were going to support the strike to Syria, which created risk aversion, pushed the yen off of it. And I think it's really kind of the tension in the yen now is between the risk aversion flows that have to do with Syria and the potential military attack, and the surprisingly buoyant U.S. economic data, which is signaling every day that the prospect of taper is going to become much more of a reality than most people think. So it's this tension between the two that's kind of pushing and pulling the pair. And where there are no Syria right now, it's probably very likely dollar yen would have been pushing its way through 100 and trying to test the 101 resistance level. As it stands now, we're going to have to, I guess, wait to see how the geopolitical situation resolves itself. But certainly the pair is kind of gearing itself up for a move towards the 100. If it can break 100, it basically opens up the run towards 101, 101.50, which is the near-term support here that you can see over from July. And that's kind of how we're shaping up. This series of higher lows shaping up into a potential breakout here if we can just take this 100 level, which is now obviously very, very key. If we fail, then it becomes another double top and could really be a much more negative construct for dollar yen bulls. As to the euro is kind of holding tight here. It's been dollar strength pretty much all the way on all the other pairs. The euro has held tight here around 31.50, made a small near-term bounce. And again, I think the euro obviously getting weakness because of the taper construct, but this is a near-term support level, and after about 1, 2, 3, 4, 5, 6 or 7 days of negative flow, it's not inconceivable for us to have a little bit of a dead cat bounce. So we could probably mount a run towards 32, perhaps even 32.20 on a rebound basis. There isn't much economic data here. It's just really going to be a question of whether we have a little bit of short covering after so many days of selling off in the euro. Cable is performing better on a relative basis, and cable is definitely holding above the 55s, but cannot break the 56s. Today in front we have the UK services PMI. If that is a very strong number, that could give us a potential to kind of bust through here. But if we fail on that number, that would suggest a lower top, a pretty negative construct for pound, because you basically have a failure at 57, failure at 56, and then it could give way to move to 55s and 54s on a reversal basis. And lastly, what's finally kind of waking up from the dead is where am I? Aussie dollar. Aussie dollar did bottom out to the surprise of many, right above this 88.50 at around 89. Is now holding relatively firm above 90, around 90.50, and very likely if we have halfway decent GDP numbers, could possibly make a run towards 9100s. But if we kind of fail here, this would be it'll be just another short-term top failure. Still, really from the short side, it's not a trade until we break the 88.50s because it's pretty much consolidation on higher lows, which suggests that the pair may want to go higher rather than lower after having been sold out so much. Last but not least, we have also dollar CAD today because we have the BOC meeting tonight. CAD has been very weak. Dollar CAD is getting a tremendous amount of strength here. We're above 105s, but not above the 106, which is the much more key resistance level here. And you see how it still continues to bunch up here. So we'll have to see what the BOC says. If they're uber dovish, it could push us through these levels here and open a way for a run towards the 107s. If they are modestly buoyant about the prospect for Canadian economy, then we could have a trail back down to 105s. It's still a very tight trade for dollar CAD, but the fact that we can't really penetrate above 106s for a good 2.5 weeks suggests there's definitely sellers above this level. They're going to have to bust through those sellers significantly tomorrow in order for us to really take the fresh highs. So that's how the day shapes up. Wishing you guys the best of luck, the best of trading support. Schlossberg for BK Forex. Over now.